Welcome to Markets Now. I'm Michelle Rook, along with Mike Zuzulo with Global Commodity Analytics. We started off with grains to the plus side. We've lost a lot of our strength there, except for some of the wheat contracts, while over in the livestock. Cattle up into contract highs. Hogs are a little bit more mixed, but those front months are at least seeing a little bit of pressure. And Mike, let's start off with the grain trade. We opened up firm. We've set back. It's really the volatility we normally see in a weather market, isn't it?
Yeah, it's the first big test, I think, of this 23 weather market in the Central Corn Belt. Iowa obviously is the major mover. I think today, coming back with the GFS model staying wet, the European model letting more water in to Iowa. Not a lot, but it really does do a shift in terms of where it puts the high pressure ridge, Michelle. And this week, both models are starting to indicate maybe that high pressure ridge gets pushed either north or east. And all of a sudden next week, we start to see the rain spigot open for Illinois, Iowa, and parts of Indiana, and really relieves a lot of tension that started to build up in this market, rightfully so, ahead of a very important crop conditions report today. Not just crop conditions report in the corn, but crop conditions in the wheat. I talked to a client in northwestern Ohio, asked him what his situation was this morning. They were about a week, 2 weeks out from starting to cut wheat. And he said the elevator this morning was talking about how they may not need excess capacity, that the top end yields maybe has already been taken off of some of this wheat that was expected to be bumper, if not record harvest.
What are you hearing on some of the early harvest results on wheat, though?
Yeah, Southern Plains, it's very delayed. It's decent, but producers are very worried about quality if this pattern continues. And so soft red wheat really haven't gotten into much. Most of what I've heard in soft red wheat country matches up with what the Ohio producer said. I talked to a good client in near Lafayette, Tippecanoe County, Indiana last week, and she was telling me that they were very concerned about only having 3/4 of an inch of moisture the whole month of May, in terms of what that's going to do as far as test weights and how big their yield could have shrunk in terms of not being mid 90s like the Southern Illinois wheat tour, and maybe losing 5 to 10 bushels. And so there's a lot more anxiety and apprehension heading into the wheat harvest in soft red wheat country. And that's really what's going to make our production this year if USDA's yield is going to be right.
Yeah, so let's talk about USDA now that you mentioned that WASDE report coming out on Friday. This typically isn't, one that is a major market mover, more so the end of the month with acreage, but any expectations?
I think they're all going to be very important this year, because I think the market has once again moved into a negative demand mindset. I think they're expecting lower demand, export demand here from the United States. But I think the world demand numbers are going to be much more important, especially given that we still don't really have a good, strong bead on what the Brazilian corn crop really is going to be. And that's being finished up now because it was late. But I'll be very interested in what they say about South America and overall world demand. I think the dollar against some key currencies has certainly hurt us in the export market, but I don't think the exports overall have been hurt that much. And obviously Saudi Arabia, a huge buyer of wheat. We were expecting 480,000 tons of wheat. They came in at almost 625,000, probably going to be mostly Black Sea. But I think between what's going on with the Black Sea corridor and that agreement being elusive, that extension being elusive, and what's happening with some of these grain numbers that others are getting, like Brazil, seeing big time, May exports of soybeans into China versus May of 22. Those numbers mean a lot to me.
You said exports aren't really that bad, but export inspections and export sales are both behind where we were last year, but especially on corn, aren't they?
Yeah, without a doubt. And I should clarify, I think global exports are very strong. I think the
Okay.
price is low enough. We're getting demand. It is a problem for the United States, and the trade has been trading that. There's no question in my mind about it.
So talk about EU wheat prices and what they're doing as well, because that's part of that story you just mentioned.
Yeah, it really is, especially with the EU maybe getting some of the Saudi Arabian business or taking some of the price initiative off of the Saudi Arabian business. June futures expire in Paris today. I think the low in wheat has got to come from Paris and the EU futures, because that Black Sea grain deal and all the demand that we've seen globally really has centered around the EU price not making a low and really keeping the hard red wheat here in the United States under pressure and limited in terms of futures rally potential. And I think obviously with the imports coming in for wheat, that's been a big deal too here in the United States. And I think that's why the EU has extra influence in our markets as well.
As you mentioned, though, the Black Sea deal kind of in jeopardy here. We hear that, some ships maybe got inspected, and then we hear that they're not, and that now Russia is saying, hey, we're not going to extend that deal past July. Is that what you're reading this morning as well?
Yeah, the only thing to add to that is that the Russians, for some reason, are inspecting the newest ships instead of the oldest ships. And I would guess that is to try and hurt the quality of the Ukrainians and tie up shipping and make a more of a mess for the port structure and maybe cause some insurance grief. That's still an issue in my mind, is who's going to underwrite this insurance when things get more volatile.
Great. Let's also talk about outside markets. OPEC over the weekend, at least Saudi Arabia, saying that they're going to have a production cut, and that is having an impact or spillover into the commodities sector and the ags today, isn't it?
Yes, and I think this is where the agriculture producer and what we just talked about with the strong dollar really needs to be on the front end of this, watching what OPEC's decision. Saudi Arabia making the cut is a twofold decision. One, to take pressure off of South African countries to be able to pump more volume, but it's also so that Saudi Arabia can get closer to an $80 WTI crude price or an $85 Brent price. And that is because they have a lot of infrastructure projects that they want to undertake, but they need the revenue, and they really need it to be about $80 or more to be able to get this revenue to go after these infrastructure projects. So I think it's really an important time that the Hong Kong Equity Exchange, the crude oil markets, these two markets have been down hard. And I think they've tested a lot of support, and maybe some short covering could be coming. And if that's the case, if China's market goes up, the crude oil market goes up, I couldn't see why the dollar wouldn't want to feel pressure under that, especially against the Brazilian currency and the offshore Chinese currency.
Yeah, and that all has a big impact on our markets, on the ag sector for sure. Will it also impact what we see in terms of ethanol production and demand?
I think so. I mean, this is where if the unleaded gas price gets too high and the ethanol can come in and knock that down, especially with that E15 blend, it could be a real boon for the ethanol industry. And I think that's where you really want to watch the basis levels, the spot basis levels for, say central Nebraska and Linden, Indiana, and places like that, where the big poets out there in eastern Indiana, western Ohio, are we going to have a situation where the ethanol producers are fighting for the same corn that the feed and livestock producers need? And that could really create an environment where the trade sees a stronger demand domestically. And so it's certainly something to look out for, and great point to bring up.
Yeah, so let me ask you about the inversions that we see, because of the tight supply that you just mentioned. How long will we continue to see that inverted market? Will it be up until the time where end users are comfortable that we're going to get enough new crop supplies for them?
Yeah, I think this goes back to the Brazilian corn crop specifically. We're pretty sure that the South American bean crop is there because we're bringing imports in already. I'm worried that the trade thinks that if we take the futures market high enough, we'll just bring corn imports in, just like beans and soybeans, Michelle. And so I'm really concerned that if the crop is there on the safrinha corn in Brazil, we'll see some imports of corn come in. So I think that's the big thing to watch. To answer your question, I think it could be over by the time that July goes off the board. That's typically something that does happen in history, where the July kind of leads the descent and December holds the premium because we're not sure about the new crop yield. You pull the premium out of the front end and keep it in the back end. That's something very key as we see the July kind of weaken here today, even on 30 million bushels of corn export inspections.
Yeah, certainly something to watch. Cattle market, more new contract highs. We had record cash trade last week. I guess the question is, can we continue to keep this going?
That's a really good question, but I'm going to say I don't really care that much right now because I'm in a hedging situation where profit is there. To get more direct to your answer, though, I would say that 177 area that we put the high in April and fat cattle lead month futures. If we close below that on a weekly close, I could see where based upon the latest commitment of traders report, both fats and feeders could be due for a pretty substantial pullback. I'm not calling a high in this market. I'm just saying the profitability is there. And cattlemen in this area of the country, I just picked up the phone right before we went on the air with the cattleman just south of me saying, I'm ready to start hedging. They see the profit, and I think that's really crucial. I'll probably start hedging in the back end, the deferreds first, and then work towards the front end. But this week, I think I'll be putting some hedges in place.
You bet. And it's about time these guys made some profits, isn't it?
Absolutely. And I think the retail market is really starting to show some signs of wear. Some of the retail data from USDA on Friday showed some activity indexes and some business indexes down almost, if not over 20% versus the prior week. So we are seeing that pork win and that poultry win at the meat counter.
Okay. So you're concerned that once demand rolls over, that we could put in a top in that market.
That's right. And the big thing I'm talking to cattlemen right now is that I don't know if there's going to be a recession in China, Europe, or the United States in the fourth quarter, but I think there'll probably be one in one of those countries, if not more than one. Let's plan for it, and let's assume that the consumption pattern is going to shift if we go into a recession somewhere around the world.
We had finally a big up week in the hog market last week. And I don't know if the lows are behind us or not here, but we're consolidating a bit here today. What is your outlook?
Well, I think the futures just flew too close to the sun. And in terms of the mercantile exchange cash index, we got upwards of $7, $8 premium, almost, $9 at times. And I think they're coming back and readjusting. I do think that seasonal is positive for the pork. The cash market would suggest that. The weekly grocery store advertisements would suggest that to me. So that $80 cutout number that you and I have talked about forever seems to have held. And now we've been able to see some short covering by the funds. I think the big question in my mind is the Chinese, are they done with liquidating their sows? I'm hearing right now that they're getting ready for another round of liquidation. So really watching those pork export sales the next 30 days.
All right. And a quick question for you, Prop 12. Do you think we have all the negativity built in now?
I do. It's made the national news, and meaning the national normal, non-ag news. I do think that.
All right. Thanks for joining us, Mike Zuzulo, Global Commodity Analytics, and that's Markets Now.